Welcome back to the channel. I'm Foreman, and today we're going to be looking at Argo Blockchain. If you'd like to make any paid requests for the specific stock that I cover on this channel, the link will be in the description down below. Much like last week's video, which was on Boohoo card at the top right of the video, this is also a stock I hold in my portfolio, so my opinions and therefore conclusions are likely already going to be formulated because I've had a good time, or at least a longer time, to learn and research the company. And if you like the video, please drop one of these to help beat that YouTube algorithm. When we look at what Argo Blockchain does, it is the only UK publicly listed cryptocurrency miner as of right now. They have a focus on the likes of Bitcoin and Zhash. They have recently also been listed dual onto the NASDAQ, and that was an uplisting, but we're going to talk about that a little bit later. When we look at Simply Wall Street, which is what I prefer to use for basic research, it has all of the information I need at the start, and it just keeps things simple. It gets all of the unnecessary clutter that you may not want to look at. We do have a few points to check. So when we look at the valuation, it's obviously going to look very high on a price to earnings valuation. You might go, well, that's such a premium, that's like extreme growth stock level. I'm a value investor, I'm not going to buy. But this is because it's trailing 12 months, meaning that it's tracking the earnings reported in the last 12 months. And Argo Blockchain actually became profitable in the last year. And so the earnings PE ratio is going to be very inaccurate just for now. But as time goes on, it will be interesting to see whereabouts this settles. But I'm pretty sure people have mentioned on their own research that we're looking at single-digit PE here. Again, once more, when we look at the overall revenue of the company, it is still lagging behind, as they are typically getting a fair amount each month. So at the moment on a valuation, it's going to look very high. The best thing to look at, in my opinion, is the performance. Obviously, this 5-year CAGR is going to be massively inflated. That's why it's 131.5%, because they were unprofitable in the last year. This is going to massively bolster this, and so it's going to really inflate this overall calculation. What we can see on the graph is that we can see the push from 2020 into 21, where the revenue has doubled alone. And we've also seen a steady increase in the profit margins. Earnings has scaled with revenue growth, and in fact it looks like it's going to continue to grow. And from what we see, they do have very high mining margins on their Bitcoin, so this can be a very profitable business, especially as the higher Bitcoin becomes in price. Likely the more profitable Argo Blockchain become as a business. But that also means that their valuation is tied on multiples, because they mine Bitcoin almost exclusively other than Zcash. This means that when Bitcoin goes up, or the asset of Bitcoin goes up, the likes of Argo Blockchain's future expected revenue is also likely going to go up. But this can also be a negative and for the downside, meaning that if Argo Blockchain goes down, if Bitcoin goes down, Argo Blockchain will likely do the same. But this could be a great way to gain leveraged exposure, or maybe not leveraged, but certainly a more exposure to the likes of Bitcoin. And it's much like trying to get exposure to the asset of gold, but instead of investing in gold itself, you invest in a productive gold mining asset company, or something like Sentiment, or that's probably not a very good example as they've had their struggles. However, you'll notice when I look at the free cash flow, it is massively negative, and you'd think, right, okay, is that a red flag? Is this something we have to worry about? And in this case, I think not. This is because, yes, as mentioned earlier in the company overview, Argo Blockchain does have a high level of non-cash earnings. But then you think about it, this is a cryptocurrency miner. They believe in holding their assets. So at the moment, of course, they're going to have a high level of non-cash earnings simply because they're keeping the Bitcoin on their balance sheet and adding it to their HODL, which we will be talking about. And then when we look at the financial health of the business, this is where things are pretty impressive. Overall, it says that they've got £19 million in debt, although this was last updated on June 30th, and we will be talking more about this. But when we look at the relative amount of cash, it is quite strong. They've actually got a lot more cash now, although that's from capital raising, which could be a concern about the likes of Argo Blockchain because of the ever-changing business model, or not business model, but business environment. This means that in order to stay competitive, they need to keep raising funds. And obviously, they don't want to sell their cryptocurrency holding if they believe it's going to appreciate in value. So it means that share offerings, share dilutions, and even private capital fundraising is certainly on the cards, and that could be a concern for someone looking to be a long-term shareholder. Myself, I've experienced, I think, 2 dilutions in my time of holding, and I've only held for not even a year yet. So you can definitely see some concerns there. But then again, if you are someone that is consistently buying into the stock, then you may be able to get away with it. But it does mean that your overall position size is going to diminish over the longer term. That doesn't make it a bad short to medium term play though, definitely not. But I'm personally a long-term investor, and so that is one of the main things I want to keep in mind. Obviously, they're not going to be paying a dividend, but when we look at the management, we can also see that it's relatively low in terms of their tenure. Again, this is a young company, and so it makes a lot of sense. When we look at ownership, we can see that Peter Wall, the CEO of the business, has been selling shares in February, although I don't think this is much of a concern. This typically would happen. We don't have much individual insiders actually holding the company. Instead, it is really held by a lot of the general public and some institutions. And we may see with their recent uplisting to the NASDAQ, we may see more of a demand from the US and maybe more institutions that will look to buy in. But that's my own personal speculation. When we look at the most recent results, the September operational update, we can see that this is pretty darn impressive. If you've not looked at a cryptocurrency miner before, this is certainly the highlights. So basically the idea here is that during the month of September, Argo Blockchain mined 165 Bitcoin. This is less than what it was 206 in August, but their overall mined Bitcoin year to date as of this video is 1,479 Bitcoin. But when we look at how much of profit they make on this, their revenue in September was £5.5 million. And then we can also see that they've got a monthly mining margin of 84% for September. And that this is despite the increases in network difficulty since July 2021. And that if we look at the last month where they had mining margins of 86%, we can see that this very much holds up. In fact, we can see that the gross margin exceeds 100%, which is a good sign to see, meaning they are a very, very profitable business. What we do want to see though is that they do have a very high depreciation of their mining equipment. This is natural because in this space, the technology is often getting updated, and so these new assets that they have to buy in order to remain competitive means that they will be spending a lot in capital expenditure. As I mentioned earlier, needing the funds to process that through shareholder dilutions, they're going to need a lot of capital in order to stay competitive. And this means that more depreciation is going to happen. In September, it was roughly around about £700,000. In August, £800,000. But this is certainly an ongoing concern. But since they are mining more Bitcoin, and their Bitcoin on the balance sheet, at least in the last month, because Bitcoin's trading at roughly £40,000, if that's going up as well, then we can see that overall they're going to be making a lot more money from it in general. And if you'd like to sign up to my stockbroker FREETRADE, you can get a free share worth up to £200 when you use my link in the description down below. So go and grab that free share. Argo Blockchain isn't just an investment for your cryptocurrency mining. They've also taken a stake in another company or a venture capitalist fund named Pluto. Pluto aims to invest, or at least take projects that they incubate and equity positions in them, of the likes of digital assets. And this is again more exposure towards the cryptocurrency industry and kind of sector, and so you could get more exposure from it. Obviously, with the recent IPOs and a lot of these companies, or at least crypto in general, seeing very high valuations, when Pluto does come to IPO, which has been speculated to IPO in the last 6 months, although it's just been pushed off, I'm sure they're waiting for the best time, we could certainly see that the amount of capital that they have invested, which was roughly $40 million, I believe this is roughly £25 million, I believe that once they do IPO, and we may see the shares of Pluto go up and do well, then they're going to have even more underlying value on the balance sheet of Argo Blockchain. They could then choose to sell it if they wanted, which then they could reinvest back into more mining equipment, or they could continue to hold for the longer term, which I think they may do because, as I say, they're very bullish on the likes of Bitcoin and cryptocurrencies, and they want to stay ahead of the curve. But this is where it brings me on to the loans. They take a lot. Originally, it was the $20 million loan to build out their Texas facility. They also mentioned back then, and please take note of this, that they will also take a $100 million pre-negotiated loan for the Texas facility. This would massively increase their capacity because it would have at the start a 200 megawatt capacity, but there is potential to expand it up to 800 megawatts. So this is a lot of growth. And the site itself is called Helios. Helios, I speculate, is, for instance, the god of sun, or I believe Greek god of sun. I believe that that means they may be next to a solar power plant, or they may have plans to have their own solar equipment to further increase their margins, because then they would be operating their own power supply. This could be very interesting to see, and obviously as it is in Texas as well, we could definitely see some very good growth as the land itself is relatively cheap, although there were some concerns by Boatman Capital short report that they overpaid for the land, although Peter Wall, the CEO, quickly tried to debunk this by saying that they're also paying for the included services of the construction of it, which is still something that is playing on my mind. And then obviously we have the $25 million Bitcoin-backed loan, and there was more to this. They already had a loan, and then they added to it even more. For me, this left a very bad taste in my mouth for the management, because they were rapidly increasing their debt, and obviously I could see why they needed more capital expenditure, and they didn't want to sell their Bitcoin holding, but such a short-term loan, which I believe was of 6 months. In fact, the loan matured on October 29th, so at the end of this month, it was like a 3-4 month loan. Sure, you may have argued, yeah, well, the interest rate was roughly 4.5%. This is quite low. It's still incredibly risky. Obviously, in hindsight now, we know that they listed on the NASDAQ, and we know that from that they've raised a lot of capital so that they are able to pay down this loan, and it just seems like they've tried to push ahead of schedule with what they've done and just try and get ahead of the curve. I can see the point behind it and why they made this decision, but it still has that bad taste. Alongside with that Boatman Capital report, I am a little bit more sketched out. And it's if they're willing to dilute shares and raise capital and get these loans quite a lot, it could be quite quickly before the quality of the company deteriorates. So this is certainly one that you would want to be watching as you're holding to make sure that the quality remains, or if they get too much debt, and for instance they've got a very limited cash and they're not willing to sell their Bitcoin position, then this could be a change of the story, and at that point you may look towards selling the position, for example. Which means I think Argo Blockchain may be more suited to those that are looking to swing trade or even just day trading, because there is a lot of volatility in this investment, and at least recently Argo Blockchain's share price hasn't followed the curve or the trend of Bitcoin, but I think this is because of the NASDAQ lockup period and a lot of complications ongoing there. We may even have a large market seller, although I am speculating at this point and I'm not going to say this is entirely the case. And then we've also got a massive expansion to their Bitcoin mining capacity that they plan to get installed through midway through 2022. They've got more Bitmain Antminer S19J Pro machines, which will be paid for in periodic installments before the final shipment. So they're slowly but surely paying off that money that they will need to get more mining. I have a feeling they're going to add this mainly to their Texas facility once that's fleshed out, but they're on about how it's going to increase Argo Blockchain's overall hash rate by 2 exahash, which is an incredible amount and is pretty much more than what they already have. So there's certainly a lot of potential for the future on how much they can mine. One would question, how much will they mine, or will they continue to get greedy? Will they continue to dilute shareholders, this reoccurring trend that I continue to mention? Or will they just finally settle down and let the Bitcoin just accumulate over time? I have a feeling they're going to look for that higher octane. Their strategy was always to look for the best available times to execute their trades. They've even sold some of their Bitcoin, which they had done, I believe, 2 months ago, where they sold roughly 60 Bitcoin. And the whole idea behind this was just raising some capital. They saw that obviously the Bitcoin was quite high in price, obviously not now in October, where the price is even higher, but they decided to sell some down. And that made sense to me. That was effectively them de-risking slightly, because at the time they had that very aggressive Bitcoin-backed short-term loan, which was very much a scary thing to think about when I wasn't aware, or at least I felt that they were really stringing us on with the NASDAQ listing. This was one that they declined to comment about and only really did it as sort of sentiment had certainly turned down. And then when we talk about this NASDAQ IPO, they had raised a lot of capital. I'm talking a lot. And unfortunately, this has diluted shareholders again. The idea was that they were going to issue 75 million American depository shares, which is basically a 1-to-10 ratio. One US NASDAQ listed ARBK share is the equivalent of 10 shares in the UK of ARB. This is a good thing, but they did also add a further amount of American depository shares, which have further diluted the share pool along with the listing. However, if we see a lot of volume and a lot of demand in the US, or for instance, I believe a lack of liquidity, and now I am speculating because this is out of my depth, I do have reason to believe that what would happen is that some of the shares would be moved from the UK pool. I'm not sure how this is done or the process, and I believe that's moved from the UK pool to the US pool, which may further increase price action as US investors may be more bullish than the UK, as the UK markets have certainly left this stock to stagnate, and that they may then push up shares, which would be good for the US shares and also the UK variant. But this raising of, I believe, over $100 million is a lot of capital, and it will be interesting to see how they invest it. If we work it out roughly, we've got about mid 30 million in terms of that aggressive short-term loan. They also paid, I believe, another 30 odd million for their next set of mining kit. So they do have roughly about $40 million on the balance sheet, and this is only wild guesses, but there is certainly something they could be doing with that. It will be interesting if they use that to speed up the development of the Texas facility, or whether they just sit there, or maybe they invest more in their stake in Pluto. Perhaps they look for other opportunities. I think I would prefer that they kept it in cash for now. This is the defense. Ultimately, the amount of cash that Argo Blockchain has is our defense against the dilution of shares, because ultimately they're going to be holding their Bitcoin. And I think the worst choice I could see, unless Bitcoin dropped to a very unsustainably low level, is buying more. I do not want Argo Blockchain to buy Bitcoin on their balance sheet. Obviously, Marathon have done this in the past, but I believe they got a fairly attractive valuation on this, and it made it worthwhile. I don't think buying now, especially as Bitcoin is fairly high, would be a very effective use of their capital, and instead I would look for future expansion of their overall mining pool, and perhaps upgrades of their equipment, or even more loans where they are leasing the equipment. They'll pay back the lease, have less capital because they've not got to worry about the depreciation of their mining machines, whilst also getting more of a hodl. It will be interesting to see how this one progresses in the future. As of this video, I do hold shares in Argo Blockchain. I remain somewhat bullish over the medium to longer term, but once I once I get back into the profit, which I am down about 30% at the moment, I'm likely going to trim and de-risk this position. I have a massive exposure to this stock. I caught FOMO, to say the least, and was buying a lot, trying to catch a falling knife, whereas I should have been more patient, waited a bit with my capital and bought more as it got lower, instead of just rapidly trying to get money in, thinking it was going to bounce back up. That is the fear of missing out in prime example right there. And as I was doing that, this became a large portion of my portfolio that didn't represent my conviction. Don't get me wrong, I'm bullish on Argo Blockchain, but not as bullish as my other holdings in the portfolio. And the Nasdaq listing was certainly a driver for this, and I would like to see how this performs once the lockup period ends. And then we have the likes of the Robinhood and Webull investors, and this is just the retail part of it that can certainly push shares up. And it will be interesting to see what kind of institutions are buying in as well. And if you're interested in my Boohoo stock analysis, the one I'd done last week, the card is at the top right of the video. Don't forget that you can request a stock for me to cover. The link is in the description down below, so please go and check that link out. Thank you for watching. Have a fantastic week.